Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're talking about the meaning of investing versus speculating. In 2017, the global value of all Bitcoin in existence soared from $20 billion to about $320 billion. Bitcoin was making headlines all over the world, and it seemed like cryptocurrency had transitioned from the technology world into the mainstream. One of the benefits of cryptocurrency is that the transaction history is fully contained in each transaction. Theoretically, someone could analyze the transaction history and perform an audit of all transactions. That transparency should build trust into the system. Now, practically speaking, nobody's ever done it because it's a huge amount of work. That is until recently. But before we dig into that, a little more background is needed. There's another cryptocurrency called Tether. Tether's main feature is that it's tied to the US dollar. For every Tether coin in existence, there's supposed to be a US dollar in a bank account backing that coin. Since most cryptocurrency at the time was quite volatile, cryptocurrency investors overwhelmingly would purchase Tether with US dollars and then buy another cryptocurrency using their Tether, whether it was Bitcoin or Etherium or another currency. The makers of Tether insist that new Tethers are only created by demand with the backing of purchases in US dollars from end users. Now, researchers John Griffin and Amin Shams took a look at the influence of Tether on the price of Bitcoin. They loaded all of the Bitcoin transactions and all of the Tether transactions into a single database and started looking for patterns in the data. They developed a thesis that Tethers had a regular pattern of coming into the market whenever the price of Bitcoin dropped. They also noted that the pattern of buying was much more orderly and consistent than other market activity. They also found that after this surge in Tether buying, the price of Bitcoin went up. And all of those market-moving transactions went through a single exchange called Bitfinex. And it turns out that Bitfinex is owned by the same three people who own Tether. Bitfinex is an exchange that offers its users complete anonymity. You don't need to provide any identification to open a Bitfinex account. The researchers also found that almost half of the $300 billion of price increase in Bitcoin was linked to those suspicious transactions involving Tether, Bitfinex, and Bitcoin. That's $150 billion of profits that have a cloud of suspicion over them. Now, the New York Attorney General has started investigating these transactions as well. The folks at Tether have been asked to prove that there is in fact a paper trail showing $1 US backing every token that was minted. So far, the company has failed to do so. Companies said that Bitfinex had about $850 million in the hands of a payments processor that was under investigation. Those $850 million were seized by law enforcement officials in several countries due to the investigation. And Bitfinex claims that the seizure of those funds was without merit. In the meantime, Tether transferred $850 million to Bitfinex to maintain the balance sheet at the exchange. But this had the side effect of breaking the $1-for-$1 linkage between dollars in the bank and coins in existence. If the dollar to Tether ratio is not maintained any longer, the question is Tether printing Tether coins without backing of US dollars? If that's the case, you could make an argument that there is manipulation. And needless to say, there's been significant speculation of currency manipulation out there on the internet. The researchers look for common pathways in the patterns. And further scrutiny of the Tether transactions found a significant percentage of these Tether transactions went through a single account on the Bitfinex exchange. Half of all Tether transactions went through a single account, and a quarter of all Bitcoin transactions in 2017 also went through this single account. We're talking about $150 billion in currency manipulation is currently alleged to have been orchestrated by a single entity. Now, some folks have been critical of the analysis, saying that a single custodial account could be a logical explanation for all those transactions going through one place, as opposed to being the work of a single lone ranger. But that doesn't explain the highly regular, pattern-based buying that does not mirror normal market activity. Now, I want to be clear. Whenever money's involved, you're going to find fraud lurking in the shadows. The financial world has seen fraud in banking, price fixing in LIBOR, fraud in construction, the list goes on and on. Cryptocurrency is not the problem per se. It takes a deep investigation to uncover fraud in cryptocurrency, especially when it's an inside job like this one. There's no way that a single individual could manipulate price and value of hard assets like gold or real estate. There's no single marketplace for trading those assets. Moreover, the intrinsic value of hard assets like land are based on broad market fundamentals and not minute-to-minute or second-to-second price arbitrage. The underlying problem, of course, is that Bitcoin has no intrinsic value. There's no market fundamentals that make Bitcoin, or any cryptocurrency for that matter, more valuable a minute from now or a week from now compared with today. So the arbitrary assignment of value is pure speculation, which in my mind is very distinct from investing. In order to be considered money, as a lot of people have claimed, a cryptocurrency has to perform two things. Number one, it has to be a store of value, and number two, it has to be a useful means of exchange. And today, Bitcoin is neither a store of value nor a means of exchange, and so therefore it's not money, doesn't fit the classical definition of money in my opinion. It's going to take some time and further oversight before trust is restored in the world of cryptocurrency. When 75% of all Bitcoin transactions went through a single path that now has a cloud of suspicion over it, it has to shake the confidence in the entire world of cryptocurrency. I'm glad that I'm a real estate investor investing in physical assets that solve real-world problems for real people. As you think about that, have an awesome rest of your day. You'll make some great things happen. We'll talk to you again tomorrow.